All right, so let's get going here. All right, a little bit about Pristine. We've been doing this, it'll be 21 years come September. I started out in doing this in 1994, started actually myself learning about the markets, actually knowing absolutely nothing. Maybe some of you were in that same position, so it was a huge mystery to me as to how the markets worked, what made the markets move, prices moving, and how to take advantage of that. It was quite a journey, a lot of it trial and error. The services that are available today certainly weren't around when I started. There was no internet. There were some bulletin boards. There was a void of information. So it was really a time where you had to really learn on your own, snail mail, letters and such, but there was very little educational material. So it was a long road. It was a lot of trial and error, and trying to figure out how to do this was difficult to say the least. But did find out how to do it. As it says, I've done several trading challenges, won 6 of them, live events, trading live money at the Traders Expos. We've trained thousands of people. It says hedge fund managers, even specialists, market makers, and they actually know a lot less than you think they might. They do have the advantage of order flow, which is a big advantage. But as far as technicals go, you'd be surprised how little they actually know. Equity and prop traders, we have courses actually for them. We bring on equity and prop traders, give them access to that leverage money, especially for the equity traders once they get the education and pass a Series 56 test. This is people that have never owned a stock, and a tremendous amount of our own competition have been Pristine students. We've won best trading course the last several years in a row. That's a testament to what we do and the longevity of what we do. And what I'm going to share with you today, while touches on that information, it is a foundation that you will be able to use and increase, your trading, I think, exponentially once you start using it. A disclaimer. There's a lot of risk. Well, that's a relative term. There's a lot of risk. There's as much risk as you want to take. When we start out, most of us know little to nothing about the markets or how to operate in them. So that stop loss that probably you'll hear every presenter use, many of us maybe have no idea of a stop loss, and that's where the real risk is. We can define our risk quite a bit with money management, share sizing. That being said, there are instruments that could open up, an awful lot of risk. Selling uncovered calls, for example, exposing yourself to that. Trading futures without a stop, tremendous amount of risk. Last disclaimer is that I am a registered rep with Lightspeed Trading. A lot of accounts, besides the prop accounts that want to open up retail accounts, do so over at Lightspeed, as I am their registered rep, and I support them through continuing education once they open up that account. And all of us use technical analysis. Probably every presenter that you will see here or anywhere, is that approaching the market will use technical analysis in some form to make their trading decisions. What I found was that there were certain types of analysis, and I studied probably most, I can't say all, but a tremendous amount of different ways of interpreting price action. And what I found was not only can it hold you back, it can completely stop you from ever succeeding. And I think many struggle with that and trying to figure it out, as I did. I wouldn't give up. I mean, I did get to the point at one time to say, you know what, maybe this just isn't for me, and I can't do it. No, in the way that I was approaching it, and it's the way that most approach, because this is what we're inundated with. This is what I was inundated with, you know, reading the books that were available back then, and it proliferated, you know, as the growth of the internet happened, as one learned it from another and to another and to another. And I'll talk about that in a minute. But what you really need to understand is what moves prices. And prices are what we trade. Everything else can be subjective, sometimes can be added to speed up the analysis or used as a filter, especially for scanning. You know, scanners are fantastic for using certain indicators or measurements to narrow down your focus as to what you're looking for. But once you've narrowed that focus and the chart, it's prices that you need to focus on and understanding them. And the way I'm going to explain will increase your odds, and that's what we're all after. I think most of you would agree. And as I show you this, I think, you know, getting down and back to some basic things, if you do that, you're going to see that your accuracy and your odds of success are going to increase dramatically. So a little bit about where I started and, you know, in my learning process and what I looked at. One of the things that we tend to believe starting out, you know, when we're novices to this, is that the markets have to be complex. And if we approach it in a complex way, it'll increase our odds. Meaning, you know, we'll be right all the time, the majority of the time. Because these predictive types of analyses instill that by looking at projections of time and levels. And when we talk about these Fibonacci levels and projections, and you start to get into the mindset and the beliefs that they create based on the way that they are presented, you know, to think that you can define a level of support within a decimal point is not only ridiculous, it's impossible. And to predict where prices are going to turn, while I or someone else using this information could make you believe that that is what predicts prices, it's just not the case, because you can see many times where it just doesn't follow through whatsoever, and that is what led me on a path of questioning all of these things and saying, what truly moves price? If it's not, let me just get a pointer out here, it might help here. If it's not reading these circles and retracement levels and drawing from one place to another, and this, while it may look a little crazy and busy, it does to me. Many times you're going to see charts being displayed with even more lines than this, and you put lines on top of lines, you know, some sooner or later you're going to hit wherever the turn is, and we can all look at what's happened in the past and say, oh, look at the turn, look at how it lined up, and, you know, we can make ourselves believe that is where prices, why they turned. These things can become self-fulfilling prophecies, but they're not necessary. And if we keep it simple, it becomes a lot easier. You know, Elliott waves. I would say waves within waves. You know, this was just a massive confusion to me. That's why I put this little guy in here that looks totally confused and bewildered, because, you know, as you study these esoteric types of analyses and try and, you know, make sense of this and risk your money on this, it really instills a false belief of, you know, knowing what's going to happen even before it actually happens. So here's, you know, the simpler types of analysis, drawing trend lines and Bollinger Bands and stochastics, and, you know, I have a MACD on here, and I used all of this, folks. I used it all, combinations of it. It says there's hundreds of these indicators, and then the question came about, well, which settings? And depending on who I may have listened to at the time, they said, well, the standard settings work. When we talk about stochastics, that would be like a 14.33. Someone else said, well, if I use a 21.53, that really lines up with the turns. And if I combine that with a MACD with, rather than 12.26.9, some other combination, and I tried that. Maybe you've done the same thing. If some of you have, please type it in there, because I don't think that I'm alone with that, and having gone through looking at all these indicators and settings and such, and trying to make sense out of it. And when I lined it up with the past, sometimes it did line up with what was happening at the time. But other times when I changed from one stock to a next, or I changed to a different market, nothing lined up anymore, and it became a repetitive cycle of trying to fit it to another market or another market environment. As the environments change and prices trend as they have today, nothing becomes oversold. So how do you get on board? All of these indicators don't work anymore. Okay. So we talk about, what's the reality of what happens to most traders. Right? Well, we all start out with the dream of, we're going to make a tremendous amount of money. Nothing wrong with that. If you're not attracted to the markets to make money, you're after the wrong thing. But as this is 40%, after a month, they're gone. Well, with no education or trading, you never had a chance. It's just trying to do anything else that you might do, regardless of what the profession is. Without any education, your chance is zero. You might get a lucky trade here or there, but come on. Oh, I keep forgetting. I'm not used to this chat software. All right, so 80% quit within the first 2 years. These individuals probably used some money management. They didn't swing for the fences, and they approached it in some intelligent way. And I'll tell you, honestly, that wasn't me when I started out. I swung for the fences. I just had more money to lose than most, and lasted through my own inexperience and novice. You'll tend to jump from one service to another, one method to another. Never gain any confidence in the method. So after 5 years, well, you've probably narrowed down a style and a method, but still working to make your own. Now, that is really the key. Work to make it your own. Whatever it is that you're going to learn, you have to make it your own. You have to understand it completely, have confidence in it. And that takes some time. That's experience. After education comes experience. Well, your odds of success can be exponentially increased, and it doesn't have to take this long. I'll tell you the main reason it takes a longer period of time for most is because of that lack of discipline and patience. And that's something you have to work on yourself, and that takes time as well. So what is the answer? Right? Getting back to basics. Right? We can use news to our advantage, but what we have to do is define areas of support and resistance, and then just follow the trend. Let's just keep it simple, stupid. So we're going to determine reference points. Right? Where's support? What is support? It's an area where there are buyers. It's demand. Everything moves on supply and demand. So we want to first determine these reference points, support and resistance. At those reference points is where we're going to want to take action. Next thing is define the trend. I've defined reference points, but just because there were buyers before and that stock, that commodity contract, that currency pair is coming to support, it doesn't mean you want to be a buyer if it's in a downtrend. And we want to be buyers at support within uptrends or in sideways trends, or sometimes what might be a climactic type of setup as prices have moved down and retesting the support area. Now, determine if there's a void. What is a void? It's an area without any significant reference points. One of the questions that I had, a lot of questions, why do prices move sometimes and trend as they are right now? For example, if you look at Twitter, how it's trending, or some other stocks today, or the markets, why do they trend like they do? Well, they do because there's a void, meaning there's no reference points. Where are you or I or other traders going to be putting in their bids and offers? If we don't have any reference points, it makes it really difficult. So they'll tend to use a moving average, a Fibonacci retracement line, or a trend line, but these things are actually meaningless. Right? These are just subjective reference points. It's the support and resistance points. And days like today is where those subjective analysis tools really show their subjectivity and their uselessness because prices just slice through them like they're not there. So we're going to determine a price pattern that's aligned with our bias at the right location. And it's all about location. Price patterns, tradable patterns in the right location, that's going to put the odds in our favor, and we're going to build this thought process on our analysis. So we don't get caught up in exact points. It's not about an exact point in time. It's an area. Sometimes prices will poke through an area of support or an area of resistance, and that's fine. But when they come down there, well, I'm going to be a buyer. I'm going to be a buyer here. Now I just want to see a picture in alignment with my bias. Technical analysis 101. Support broken, that becomes resistance and vice versa. And that's when we start looking at trends. But in sideways trends, prices come up to this area. I want to be a seller, and then I'm just looking for a picture in alignment with that bias. So if prices are trending, what was resistance should become support. And I just visually see or draw a line there. I can visually see an imaginary line to say, well, if prices come down into this area, I want to be a buyer. And I don't want to just bid for it because maybe it comes down to this area. I want to see a picture of buying. And I'm going to continue to do that as long as that trend exists. Every time it comes down, I want to be a buyer. And as it goes up again, I'll say, what changed here? And we don't have the time for that kind of Q&A, but let me just explain to you one of the ways that we teach and look at price analysis without indicators. We look at the momentum prices are moving at. So if we were looking at indicators down here, everything looks fine. But over here, the area between the highs has gotten smaller. So if we were to look at an indicator, what we see is a lower high. And this is where, oh, look at the bearish divergence. Right? Well, momentum slows down, it speeds up, but that doesn't change the trend. Right? The only thing that'll change a trend is when prices make a higher high, and then they break below that support point. It's no longer an uptrend. So it no longer meets the definition of an uptrend, so it's not an uptrend. It's black and white. So we wait for some type of a correction within a trend. And that could be a correction through time, little sideways move. That's what breakouts are based on. So a strong move higher, and then a sideways move. And what we have here is a little shakeout pattern. These are fantastic. We love these because they shake out. They say the weak hands, or traders that are long and they say, you know what, I got a really nice profit here, and its price is starting. Let me exit. So it removes some of the potential selling or supply that will come in, and it helps relieve that selling pressure, if you will, and prices can then move higher, right, in a more easily way. Now, is it within that void that I talked about? Because that's when prices trend. But as prices correct through price, a pullback can come down to support, and here's a little picture of buying. I want to be a buyer because the assumption is prices are going to continue to trend in that direction until they don't. Right? I don't know when it'll stop trending, I know when the odds will increase that it'll stop trending, and that is when prices come up to a significant area of price resistance. It's not about drawing trend lines or Bollinger Bands or Fibonacci retracements. So now I'm going to look for pictures of selling within a downtrend. So every time prices come up to where that resistance is, I know there are traders going to be offering out there, and I look for some picture. It's not about shooting stars and dark piercing patterns or dark cloud covers or any of those. Different pictures form in different ways depending on the time frame you're looking at. So I can manipulate this picture by looking at different time frames or different types of charts. And it could be a time-based chart. It could be an activity-based chart, like a tick chart. It could, a different stock looks differently. The point is, what doesn't change is these foundational concepts, trends, where the sellers are, and what the picture is. So whether it's what we call a topping type of tail or a red bar that had no follow-through and came back in, the meaning is the same. When it's in an uptrend, I know where the buyers are. There's no doubt in my mind. I know where they are. Now, when it comes down there, I'm looking for a picture of confirmation. Whether it looks like this picture or that picture, I don't care. I know both pictures mean the same thing. So every time it comes down to a point of reference, in an uptrend being price support, and I get the picture, I'm going to be a buyer, and I look for the trend to continue until it reaches some significant resistance point or the trend fails. And then one of the reasons that stocks that make 52-week highs is because there is no overhead resistance. And in theory, they can just keep going up. Now, what I want to do here is combine a couple of time frames. So my choice, and this is a choice, there are a lot of different time frames you could use. Just like you can choose different markets. There's no great best market. It's whatever one is trending and sets up according to your plan. And here is an E-mini contract. And the 60-minute chart is trending up. That's my bias, right, where I'm calling, that's the road that I want to follow. Those support points are going to be where prices should stop. Now, while I could trade from this time frame, I want to go down to a smaller time frame and take an X-ray, if you will, get a little bit more detail, and theoretically and probably going to increase my reward to risk by getting in near the bottom of this move versus up here, getting in down here before it starts to move up. So I'm looking for agreement of the 60-minute and the 5-minute, and as it comes down to this reference point where I know the buyers are, I'm looking for a picture that tells me buyers are actually stepping up. And we have that picture here. Here's a retest pattern. Here's a little bottoming tail bar. All of this putting together with this information says that prices are going to go up. I enter, I put a stop down below here, and I wait to see what's going to happen. The trend tells me it should continue to move up. And I keep doing the same thing and the same thing, whether it's an E-mini contract or a stock or a currency pair, it does not matter. And I do that without any of these indicators, waves, bands. I'm not confused. Well, I'm not confused in this particular case. Let me quantify that, because there are times I'm confused. And when the price patterns don't line up and there's a bunch of jumbled bars overlapping each other with lots of tails or possibly gaps, that's a picture of confusion. And so the answer is just stay away from it. Why trade something or make any sense? No, that sounds pretty obvious, but if you've been doing this for a while, you know that you have traded things that you go back and look at it at the end of the day, it made no sense, but for some reason you did it on that day. And so reviewing trades is essential to learning what your mistakes are and increasing your odds. Here's a stock, and here's a big move down, a deep retracement. Let's say it was 100% retracement, which really is bearish or negative that it retraced all the way back down here. However, it's in an area where there were buyers before, and I believe that buyers are going to show up again. This particular example is one in which I wouldn't expect prices to make new highs. It could happen, but the fact that it came this far, this rapidly suggests that it's not going to happen. So I look at that as a scalping type of trade within these time frames. Now, I still want to be a buyer down here because buyers showed up before, and then I look for a picture of buying in a smaller time frame. Now, in this particular example, I'll give you a little bit more information here. And we talked about trend. And so trends, right, lower highs and lower lows. Here's the high, here's the lower low. Prices traded above that high in this 5-minute time frame. It's no longer in a downtrend. Let's buy what should be the next higher low. And that gives us our entry point. And I say, well, Greg, what about this resistance up here? It would be a great question if somebody had it, because we all look at a chart like this and say, well, what about that old high? Well, in this example where the big picture is supporting a bias of moving higher, the assumption is that this price area will be taken out. I don't know for sure that it will, but that's the assumption that I have to make. And as you can see, prices did stall there, which is fine. That would not get us out of the trade. Now, what about if prices are trending? Can you trade against the trend? Yes, at the appropriate time. And what we want to see, and here where prices are trending very nicely, at the end of a trend, prices have a tendency to accelerate. So an example of an uptrend, you have a lot of traders that are maybe throwing in the towel to cover shorts, or they're just saying, you know what, prices have just gone up and up, they're never going to pull back. And they jump on board, and there's this explosion or flurry of buying, and prices accelerate higher away from support. And what I'm looking for is an area where the sellers are. I'm always looking for where the sellers are, right, if I'm thinking about selling, right, either a long or to short. Now, on the short side, I need to see a little weakness, and a violation of the trend, or sometimes a little failure pattern, what we call a breakout failure, or an upside shakeout will do. But in this example, I've shown you here where the trend is breaking, right, in the area of where this resistance is, with this higher time frame accelerating, and then in the lower time frame, a break of a trend, and then a move up toward where those sellers are. Look for the picture of selling, get on board. It should result in a profitable trade. Manage it from there. Once it comes down to some area of support, there should be buyers there, and you'll have to evaluate what's happening. As a counter trend trade, most times we're going to be taking our money here. We're definitely, as prices move down, we're going to be tightening up stops and making sure this will never turn into a loser. So we had a little sideways trend here. Right? There's a buyers down here. This is my higher time frame. This is that bigger picture is going to tell me what to think. So as prices push up to where the sellers are, and they've been moving up several days, this is actually a daily chart, moving up into this supply area where the sellers are, I want to be a seller. And this is where I'm going to drop down to my smaller time frame and take an x-ray into what's going on there. And that'll be my bias for the next day. This is what we do day in and day out. We look at charts from higher time frames, and we say, well, you know, odds are that prices are going to do such and such based on this chart in the next day. And so whether it's going to be a swing trade, and I'd be looking for a stock that was in a downtrend, in a swing trade for shorts, and an uptrend for longs, right? The uptrend having pulled back. But in this case, as an intraday trader, I'm just looking for the stock to come up into this area and then some weakness on a smaller time frame. So here's the smaller time frame. And here's our daily chart. It's up into resistance. And when I look at an intraday time frame, and I see this daily chart, I'm looking at what actually happened inside of this bar, and I see this went sideways. All right, so it was resting at the end of the day. It broke out. Traders buy breakouts. In this case, they got long at the worst possible time because the higher time frame is into an area of resistance. Traders are caught. Long, they're going to sell. Let me be a seller too and take advantage of. That's my bias. So I put a plan together, right, of why I'm going to short this stock. I'm looking at the picture that tells me that sellers took control. I'm going to sell it short and then manage it from there. The odds are in my favor, and I'm going to see what's going to happen. And there's no sure things in trading, but we can put the odds in our favor exponentially, and that is what we're after. By combining concepts like multiple time frames, what's happening in the broader markets, relative strength, relative weakness, support and resistance, and others, it puts the odds in my favor. Then I need a money management plan and a management plan for how I'm going to hold that position. So how am I going to put this all together? Well, I'll put multiple time frames, define them. I have a higher one that's going to be my bias, and I'm going to use the lower one for my entry. It's going to be that simple. Now, one of the questions that comes up, and we're getting toward the end here, so I'll be happy to take your questions as we get toward that. But one of the questions that a lot of traders will often ask, well, Greg, if you've looked at the daily and now you're using the 60 and the 5, well, what if the weekly is doing such and such? I don't care. And it's too far out there for me to take into consideration for my intraday time frames. Now remember, most intraday time frames, you're going to be holding that position from a few minutes to possibly a couple of hours. After that, take your money, get out, move on. If you're a swing trader, you're going to definitely look at that weekly chart. The same way we looked at the 60 and the 5, I'm going to look at the weekly and the daily. The weekly is coming down to support. The daily may be trending down at the time or had a deeper retracement, but the weekly time frame suggests to me that prices are going to move up. So I'm taking that position on the daily time frame and waiting for things to come align from those two time frames. That's when the momentum really picks up. There's no perfect time frame. There's no perfect type of chart, right? That is just what leads most of us to move from one thing to another, to another, to another, right? It's a choice, and you have to make those choices. You look at too much information, you're going to get confused. That is a guarantee. So know your support and resistance levels, or lack thereof, the void. I can't see some of these questions here. Support and resistance on a higher time frame. Okay. Relative strength and weakness. What is strong and what's weak? For example, the markets they're strong today. They moved up very nicely. Some stock that has been weak and up against some resistance here probably could be a good short candidate, once the market's weakened. And that's, it's a simple concept, but very powerful. Know what's happening in the broader markets and within sectors. Look at your market internals, breadth and sentiment. I posted a chart this morning it went on StockTwits. You can look me up on StockTwits or Twitter or Facebook. I posted this morning before the market opened up. I said that the internals are at extremes here. We're likely at a turn. So market internals are a key for your bias on an intermediate term basis and even on a short term basis. I said it's probably going to be a reversal day today. This is before the market opened up. You need sound money management and trade management. And just knowing a pattern or a candlestick pattern, that's not going to do it. And it's a starting point, but it's not going to do it. You have to have a trading plan that works for you. You might think that you want to be an intraday trader or a scalper. It may not be what's going to work out for you. But moving out, maybe in trading from the 15-minute chart is going to work out for you. So, there's some trial and error there to find out, where you're comfortable and how you are going to trade. Point is, all of this takes time. The education, finding out what kind of trader you are, the time frames you're going to use, the charts you're going to use, even the colors. You may decide I want a white chart or a black chart or, a blue chart. That may all sound crazy, but believe me, you're going to go through that. Some of the comments that we've got, you could read it, what it says here, folks. Like I said, we have a lot of students. They all love, once they get involved and take a class and the support that we provide them after the class. Really love the TPM. Outstanding job, priceless. Kenny's a long-time subscriber, and he has shared his own personal trading account with me and showed me black and white. Makes a ton of money. So you can do it. You're going to take some work, education, and putting it together for yourself. And if you're interested, we're going to be holding a class we call Trading the Pristine Method. It's a tremendous amount of information. It's a 2-day class. As it says, it's normally $29.95. And you might be thinking, who would pay that kind of money for a class? There's so much information out there today, for a ridiculously low amount. But believe me, you're not going to learn to do this for a living, for $20. This took a tremendous amount of time to put this together and learn it, and it's being shared with you. And in addition to the class, we're going to support you for 3 months with follow-up coaching, which we do on Tuesdays after the market close. I'll be doing that actually today at 4:15 with students evaluating the market, trades that they've done, and sharing a lot of information to help support them. What do you use? This, I don't know. I'm really not familiar with this. Really hard to see these questions. It's so small. I can't. So guys, we have a special for $9.95 if you sign up by this Friday. And you can contact a counselor about that. But we're also going to provide you with an ebook, 7 Steps to a Good Trade. It'll really help you putting together a trading plan and how to look for that good setup in combination with what I've explained to you today. You can email counselor@pristine.com, again with the subject matter investor inspiration exclusive offer if you're interested in the class. So you might want to email a counselor. They'll contact you back. You might have questions. And what am I going to learn? How much support is after that? It comes after that. Whatever it is, talk to a counselor, get more information, and we're here to help you. Like we say, attain your financial goals. It can be done. It doesn't have to take, like I showed that slide, 5 years. It can be done in exponentially less time, but it is going to take work on your part of study. We'll show you how to do it, and that's what you pay for. Not only the information, but the support to show you how to do it. Putting it all together and reviewing it. Lastly, if you're interested in opening up a retail account, right, we do work with a prop firm. If you want a prop account, you can talk to a counselor about that. But as I said, I'm a registered rep over at Lightspeed. This is our highest rates. If you're an active trader, you can go way lower if you're an active trader. But these rates are fantastic. If you're at one of the more well-known so-called discount firms, $9.95 or $7.95, that is not a discount. That is rather ridiculous if you're an active trader. So you can trade at a much lower rate. You can contact Joe Healy, J. Healy at lightspeed.com. You can check out the additional benefits at lightspeed.com/pristine. Okay. As I see, I have a minute left. If there's any other questions, which honestly I'm having a real hard time reading. It's like a really tiny thing. I'm probably just not using the software correctly. Sorry about that. Can you please answer this? I can't even tell what the question is, but Reed, if you can help me with that, I'm happy to answer.
Yeah, Greg, I didn't want to interrupt you while you're doing your actual presentation, but if you want to hit that plus button that's actually on your dashboard where it says questions or where it says chat, you can actually expand that section, pull it out at the end, and you can scroll all the way down. You can see all the fresh questions that are actually directed towards you because you're probably looking at ones that were to the earlier presenters.
Yeah, it's just a little tiny thing. I see an X there. Do not display this question answer. No, I don't want to do that. Um, expand it. Aha. I knew I wasn't using this correctly.
You see it? You're good to go?
Yes, webinar today. I'm sorry I got here late. Yeah, I see it. What time of the day is the live session? Please post those YouTube and Facebook links in the chat.
If you want to keep on scrolling
I
all the
can't
way,
do that right
yeah,
now.
you're going to want to keep on going all the way down because I
Yeah, I'll have
believe,
to ask me to.
yeah, those are from the earlier presenters. So, yeah, just keep on going all the way down. Those are going to be the newest questions.
Ah, received. Oh, jeez. Okay. Is Lightspeed a direct access broker? Absolutely. How are you drawing support and resistance on a higher time frame? Vic, just look to the left. Nothing fancy. Just look to where the reference points are. Is there a swing high or a swing low over to the left? It's that simple. Great stuff. Greg, spot on. Best I've seen. Thank you very much, Dar. I don't know what that was trying to call. No answer. Maybe that was from the other presenter. Just signed up for webinar. Can walk me through. If indicators don't predict, tweak the settings until they do predict the past. I guess Michael's making a joke about that. He's probably had some experience with that. But folks, you know what? Get the squiggly lines off the chart. You know, look at the basic support, resistance, and trend. Line up the pictures with that. You know, use a higher time frame for your bias, shorter time frame, you know, for your entry point. You could use the higher time frame, of course. My choice to use the smaller time frame to zero in there a bit, but you know, if you make it simpler, it's a lot easier to make a decision and you know, to interpret what's happening. You're never going to know everything. It's impossible. You know, I used to get caught up in this, and I was caught up in this myself. Meaning, if I looked at more time frames or more indicators or more information, you know, I wouldn't miss. You know, something. Right? I would know. You're never going to know everything. So you have to decide what the method is that you're going to use, and just use it. And you know, you're going to use it. Have a stop loss, you know, to protect you, and that's really the bottom line. Can you learn more to increase the odds in your favor? Absolutely. And after that, you know, if it lines up, take the trade, and then just manage it accordingly. So my time's up, folks. Let the next presenter come on. I hope you've enjoyed that. You can come to pristine.com. We do free workshops a couple of times a week. We'll actually have a trade and market review happening on Thursday at lunchtime. You might want to check that out, and you know, the ones that we do after hours. So, Reed, thank you. Thanks for Investor Inspiration for inviting me, and hopefully we'll get to know each other better. Have a great one, guys.